So I'd like to welcome Tobias Kuck, who leads the International Tax Department at Bayer AG in Germany. Tobias, welcome. Looking forward to do this interview with you. To kick it off here, Tobias, your CEO, Bill Anderson, has recently announced a new program designed to cut internal bureaucracy and to shift Bayer to an entirely new way of operating. He's promoting a new leadership culture by giving more authority to self-managed teams who are being held accountable for their decisions. How has that impacted the operations of the Bayer Tax Department, and what is your experience so far?
Marko, thank you so much for having me. Indeed, we're full steam implementing our new operating model, which is called Dynamic Shared Ownership, short DSO, and I'm more than happy to offer some insights. So generally speaking, DSO is about building an organization which is fully focused on the company's mission, that is, create value for farmers, patients, and consumers, but also for employees, our investors, and all stakeholders. It's a principle-based model, thus we are not focusing on fixed blueprints, but we are flexible in the implementation. Key elements of DSO are customer and products at the center. We operate in flat cross-functional teams which collaborate and co-create. So in our divisions, we have those product and customer teams which are fully empowered, and they operate typically in 90-day cycles, after which there is a review of the achievements, adjustment, and then we move on. Coming back to the self-organizing teams, we already have some experience in the finance area. To give you an example, on group internal financing transactions, we have cross-functional teams composed of treasury, accounting, legal, and tax colleagues. And basically, they're identifying the need for action quite independently. So they would be looking at cash flow forecasts, at tax inefficiencies, and say, hey, we're going to do something about it. They will decide on the best form of financing. They will consider aspects such as FX or interest deductibility. And they also decide on the timing and the resource planning. They are fully aligning their transactions, and they're empowered and accountable. Now, you can see the role as a leader already has shifted. It's much more that of a sparring partner. We are there to identify potential obstacles, maybe helping with risk assessment and helping to overcome risks, but it's not command and control. And sometimes you can be astonished how much you can trust people when you give them freedom. In my M&A group, basically, when we get new transactions, I'm not assigning them to members of the team, but I'm more offering, say, hey, guys, we got a new transaction, and they align on who will take care of it. They will consider who has the right skills, who has resource, and even say, hey, I'd like to work on this one. I haven't been doing something on crop science for some time, and it would be just fun doing that again. You can imagine this brings much more joy in the work than if I'm telling them, look, you have to be on this one. But clearly, as a function, we need to go beyond that. So we have initiated several mission teams composed of members from the entire community. So with different seniority levels from different locations and different backgrounds, and they have applied to be part of those teams. One team is focusing on changing the leadership model of the function. And we asked them a couple provoking questions, such as, what if there was no leadership team anymore? And how can we give more power to the experts? So the underlying thoughts are, is it always the most senior people who should make a call? And how can we be more inclusive, get broader perspective? I mean, am I always the right person having the full picture? Probably not. So pulling in the people, get the diversity of thoughts in the decision-making is key. And also, how can we decentralize activities from a leadership team? It was then by a certain coincidence that as a function, we have endeavored to approach a new joint leadership for the function. Another team focuses on how to best serve the businesses. So again, provoking questions where, what if we eliminate all those tax guardrails? And even more provoking, what if we let the business do whatever they want? Sounds a bit strange for a tax person, right, to say, hey, we're just hands off. And it's not about being hands off, but it's about opening the minds. And clearly, that approach connects to the DSO principle of putting customers and products at the center, right? So the team started to rethink the relationship with the business. They said, hey, can we apply the mindset of a professional firm, how we approach our colleagues from the business? Now, you may say, hey, I've heard that before, customer proximity, etc. And you're right. But again, if you remember, I told you about those product and customer teams. They operate as micro-enterprises, and we have hundreds of them. They operate independently and in 90-day cycles. So we need to be fast, and we need to think, how can we actually effectively offer them the tax input they need? Because, I mean, we have income taxes, effective tax rates, yes, but also tax is important and relevant to actually sell our products. We have indirect taxes. We need to get invoices out of the system. And so clearly this, if you think of the dynamic we have in the company, we need to change our approach. And this will imply organizational change, but it will also involve technical solutions. And I'm not talking about the typical chatbot.
Very interesting, Tobias. Obviously, this is not the first time that the Bayer Tax Department has undergone some organizational changes. Right. As I recall, back in 2019, certain tax operations and compliance functions became part of the newly formed Report to Record group, and the tax advisory units of the Bayer Tax Department were restructured into global focus groups. I think back then it was the first time a German headquartered multinational group has drawn a clear line between the tax compliance operations on the functions on the one side and the tax advisory function on the other side. So what is your experience with this operating model, and how do you think it will evolve over the coming years, considering also the changes that happen now?
Well, we see clearly benefits from having a dedicated group which is focusing on processes on system. I mean, you need to influence things at the source to get things right? I mean, tax requirements need to be addressed when a process such as source to pay or order to cash is designed. And having global tax and non-tax process owners, which are closely connected, can be key to be effective and efficient, not only for meeting the tax requirements, but really to get a smooth process designed. We want comprehensive process design from the beginning and don't adjust and fix things at the end. And the people you need are not the classical tax experts. You need additional skills. You need to understand process design. You need, obviously, to be able to navigate a systems landscape and communication. Well, that's almost clear. You need to have that. And with the increasing compliance requirements and complexities, data becomes more and more important. And we need to produce the data needed in the right quality, and also we need to make it accessible, right? And again, I feel like having a back-ended approach won't get you there. So we are participating, as an example, in the design of our new S/4HANA system landscape. Reflecting on the organization, in some areas, like VAT, a split between tax advisory and tax operational activities can be difficult because they are so closely interlinked, where the technical or the tax technical advice and the implementation in a system can't really be separated. So people need to be very close together. And so it can be an interface which needs to be managed. And so that's something everyone needs to keep in mind when setting up that type of structure. Going a bit beyond, thinking of shared service centers from our experience that can be successful. However, you want to apply a bit of a different approach than with the typical shared service center, right? I mean, the tasks we are talking about in the tax area, tax compliance, are often requiring a deeper understanding and also a certain judgment. So you cannot do that by way of a simple desktop procedure. You want to build up a certain level of expertise, and also, by the way, language skills can be important. Now, in a shared service center, the attrition rates often are high. So you're training again and again. So you want to have a different approach for those specialized people. And so we are able to really cover our activities.
That's very interesting. Another hot topic in the news is obviously the potential split up or carve out of some of the current business units of Bayer. Now, I fully understand that you can't say anything about that in detail, but I'd like to focus on the impact of those discussions on the Bayer tax department. And I can only assume what that involves, from analyzing different scenarios, determining potential tax costs and benefits, evaluating options, and giving recommendations to senior leadership, and so on. Could you say something about how you manage the situation and how do you communicate with senior leadership?
Certainly. You will forgive me for not commenting on any specific scenario. Obviously, I cannot do that. But more generally speaking, tax needs a seat at the table. I mean, we're talking about transactions where the tax effects are so big and really influence decisions that you can't stay at the sideline, but rather you can offer significant benefit as a function. At Bayer, we're in the good position to have established a strong working relationship with our corporate M&A function, and we do have access to our CFO. And both is really necessary in that type of situation. When it comes to these sandboxes, as you say, we typically analyze different scenarios, public and private transactions, and we go in iterations, right? This work is fun, even though it can be challenging by times. You have high time pressure, but it's a little bit the salt.
Thank you. Very interesting. Now, let's shift gears a little bit and focus on the regulatory landscape. With Pillar 2 coming in, ESG reporting requirements, CBAM, ongoing tax law changes around the world, the only constant theme seems to be a never-ending change. So what does your senior leadership expect from the Bayer tax department in this regard, and how do you approach these new topics?
Well, I'd say the expectation can be summarized very simply. Get it done, but you don't get more money. In other words, we shall ensure compliance, but address the additional regulatory requirements as efficiently as possible, both from a value and from a cost perspective. And certainly, we want to be as minimal invasive to operations as possible. What are we doing to address the changes? Well, first of all, it's important to stay ahead of the game and to constantly monitor the changes. Some cases may offer themselves for lobbying, and you want to address critical items. But with the amount of initiatives we're seeing, I guess few companies nowadays have the resource to engage in lobbying on all potential items. So we focus and prioritize where do we see value or complexity. We engage in those discussions where we see the particular interest, and we also have the expertise to provide meaningful input. And often we team up with other companies in our industry associations. Also, I think it's important to provide balanced input. In a post-BEPS world, it seems there is more openness to consider input from taxpayers as long as it is perceived as reasonable. And that's true not only in the US, where having this exchange between different stakeholders is much more natural, but also in Germany, where there seems to be at least a certain interest to keeping things practical. When we are going to address a specific topic or are in a project, it's important to set things up in a cross-functional way to involve all the stakeholders early on and get the buy-in. Because, again, you want to have comprehensive solutions. You want to consider all the different aspects early on. The data topic, again, is super important. And in a company which has such a long M&A history like ours, you have a multitude of ERP systems. The landscape is anything but simple. So getting the data is sometimes the most critical part in these projects, whereas I don't want to underestimate the complexity, but my sense is that the calculation engines aren't the biggest issue companies like ours are facing.
You already touched on technology. That's exactly what my next question is about. What's your view on how AI, such as things like ChatGPT, will affect the tax function in the future?
Well, I think the importance and impact cannot be overestimated. The chief economist of a large bank recently compared AI with the invention of the stream engine and the internet. Quite a bold statement. But we're yet only at the beginning of the development, and I don't think we have discovered the full potential. I think companies need to find their own use cases to experiment. So my advice would be get started, work in iterations, but get to it. As an example, we have experimented with language models to generate booking entries. And we leverage the opportunity or the possibility to upload specific data. So in this case, an internal accounting guideline. And the outcome, the output was booking entries, which included the account numbers from our chart of accounts. And I think I've heard that ChatGPT recently passed a CPA exam, by the way. Other examples we see is, if you think of a functional analysis for TP documentation, why couldn't we use language models to summarize the transcript of interviews, get them in the right format, adjust if you have different interviews, get everything in a similar format so it fits the documentation. Talking about M&A, due diligence probably also offers itself to the use of language models. And we do know that some companies in the US are experimenting with AI in the area of sales and use taxes. Now, despite the excitement, we need to consider and respect the regulatory environment. So data protection rules as an example. And the sensitivity of data uploaded into a system can be an issue. One colleague from another company recently said, I don't want to be the guy who exposed our sensitive company data to the public. But there are opportunities to create secure environments where, at least at Bayer, we can upload certain data to experiment with it. And yes, the quality of the prompt may be decisive for the output. But I mean, just a couple of years ago, universities and colleges were afraid of students using ChatGPT for compiling work. Nowadays, they actually teach the students how to use the technology. So you see that entire shift of mindset. Obviously, companies need a framework for the use, but I think in a couple of years, we will be at the point where processes which use AI will be audited by financial auditors and would be totally normal to apply them. And again, remember, sometimes we're concerned about the mistakes technology could produce, rightfully. But at least I'm making mistakes myself, and I think that's typically human. And so we're accepting that as well.
Yeah. Well, Tobias, thank you for all your insightful answers. Allow me one last question. I mean, we talk so much about changes, and with all the changes on the horizon, whether from a regulatory technology perspective, which one keeps you up at night and why?
Well, having a great team, having great people in our function, I'm not afraid of the upcoming regulatory changes. But that leads me to what's really close to my heart, and also of that of my fellow tax leaders, which is take care for our people, help them navigate the change, this never-ending change, and help them to grow and realize their full potential.
Thank you. Thank you for your time, Tobias, and thank you for taking this interview with us.
Thank you for having me, Marko.